Before you buy a single share of SpaceX today, I need you to know about two specific dates, not the IPO date, not the earnings date, two dates that almost nobody is talking about right now. And if you miss them, you are either leaving serious money on the table or you're walking straight into a trap. June 26th, July 6th. Write those down right now, because here's what's happening. SpaceX just had its IPO, 3 days of trading. And yeah, it ran. It gapped up. People are pumped. The hype is a very WH here. But here is what nobody is telling retail investors right now. Only 4.2% of the total shares are actually available to trade. 4.2%. That means the other 95.8% of shares? Locked, and they are coming. Slowly at first, then all at once. Now I know what you're thinking. But Mo, the demand is insane. It was 4 or 5 times oversubscribed. There were nearly $300 billion in orders chasing a $75 billion offering. Won't it just keep going up? Maybe, for now. But here is the number that should make every single person watching this video stop and think. 90% of IPOs end up trading below their IPO price within 12 months. 90%. And yet, 20% of those same IPOs go up 100% first, before crashing back down hard. So which is SpaceX? Is it the rocket that keeps going? Or the one that launches, turns around, and comes back down ugly? That is exactly what this video is about. I am going to break down both key dates, tell you the exact price levels I'm watching. 192 on the downside, 225 on the upside. What I'm personally doing with my own money, and why I am not starting my long-term position until December. If you are in SpaceX right now, or even thinking about getting in, this is the most important 15 minutes you will spend today. Stay with me. Let's get into it. All right, let's set the stage real quick. SpaceX has been trading for 3 days, and I told you. Expect at least 2 good green days, possibly 3. We got all 3. A gap up, pushed to $225, then pulled all the way back down near $200. That volatility? That is completely normal for a fresh IPO with this kind of hype. Do not be surprised. Do not panic. And do not get emotional. Here is the line in the sand for me right now. $225 on the upside. If SpaceX breaks and holds above 225, goes to 226 or higher, I am expecting this thing to run hard. The demand is there. The float is tiny. When more buyers come in than there are shares available, price goes one direction, $192 on the downside. If we break below 192, go to 191 or lower, I am expecting a retrace. We could see 180S, maybe even 170S. That is not the end of the world. That is actually an opportunity if you understand what is coming. Now, you might be asking, Mo, what's going on in the broader market? Does that affect SpaceX? Absolutely it does. Right now, we are still in fear territory on the Fear-Greed Index. Oil is down around $76 to $77 a barrel. I'm expecting oil to continue dropping, possibly down to that $50 range. What does that mean? Gas prices drop, airline costs drop, consumer spending opens up. The overall market gets a little more room to breathe. You cannot look at SpaceX in a vacuum. You have to understand the macro picture. Interest rates, Iran, the Fed, all of it plays a role. Anyone ignoring the macro right now is trading blind. But here's the good news. Even with all this uncertainty, SpaceX has something most IPOs don't have, and that is what those 2 key dates are all about. Okay, date number 1, June 26th. That is the date SpaceX gets added to the Russell US indices, including the Russell 1000 and the Russell Top 200. Now, for people who don't know what that means, when a stock gets added to a major index, every single ETF and fund that tracks that index is legally required to buy that stock. They have no choice. It is automatic buying, forced buying. And that buying pressure, it pushes the price up leading into the inclusion date. So you might be thinking, Mo, that sounds amazing. June 26th is going to be a massive day. And here is where I'm going to save you from making a big mistake. It doesn't usually work the way retail thinks. Here's how it actually plays out. Smart money, hedge funds, institutions, sophisticated traders. They buy the stock weeks before the inclusion date. They know the forced buying is coming. They front-run it. They ride the wave up. Then on the actual day of inclusion, June 26th, the ETFs complete their purchases after the close. The orders are already lined up. The buying is already done behind the scenes. So what happens the next morning? Those same smart money players who wrote it up, they sell. The arbitrage traders sell. The momentum chasers sell. You usually get a little bit of weakness right after the Russell inclusion date. Not always a crash, but the buy the rumor, sell the news effect is very real here. So what does this mean for you? If you're planning to trade around June 26th, be careful. The run-up into the date is the opportunity. The day after, that's usually where people get caught holding the bag, thinking it'll keep going. Watch volume, watch price action, and have a plan before that date hits. Now, the Russell inclusion is good. It creates buying pressure. It creates visibility, but it is not the big one. The big one, that's date number 2, July 6th. This is the date. This is the one that changes everything. July 6th is when SpaceX gets added to the Nasdaq 100, which means it goes into QQQ and QQQM. Now, if you don't know what QQQ is, it is one of the most popular ETFs in the entire world. Hundreds of billions of dollars track this index. Every retirement account, every institutional fund, every 401k that holds QQQ has to buy SpaceX when it goes in. We are talking about an estimated $8 to $10 billion in forced buying. $8 to $10 billion. That is not a rumor. That is math. And here's the thing about Nasdaq inclusion. The float matters. The amount of shares actually available to trade matters. Remember, only 4.2% of SpaceX shares are in the float right now. When you multiply that limited float by 3, that's how the index weighting gets calculated. You get a very specific number of shares that need to be purchased. When $8 to $10 billion worth of buy orders hit a stock with this tiny afloat, price moves dramatically. Now, just like the Russell, smart money will front-run this. They're probably already positioning. The run-up into July 6th could be significant. But here is the key difference between the Russell and the Nasdaq. The Nasdaq 100 inclusion is much, much larger. The QQQ has way more money tracking it than the Russell ETFs. The forced buying is bigger. The price impact is bigger. So the pattern may be slightly different. Instead of a clean run-up, then sell-off, you might see continued strength for longer because the actual buying volume coming in is so massive. I'm not saying it won't pull back after. It likely will at some point. But the volatility heading into July 6th, that is where there are serious opportunities for swing traders. My plan, I am watching both dates closely. I'll be trading the volatility. I'm not making long-term buy decisions around these dates. I'm playing the charts, playing price action, and respecting the key levels I already gave you. 192 downside, 225 upside. If this breaks above 225 before July 6th, I would not be shocked at all to see this thing run hard into that Nasdaq inclusion date. Okay, I have been talking about opportunity. Now let me give you the other side, because I promised you the full picture. Let's talk about the statistics, real numbers, not hype. Stat number 1, 90% of IPOs end up trading below their IPO price within 12 months. 90%. Think about that. 9 out of 10. SpaceX IPO'd. It's exciting. Everyone loves it. But statistically, the odds say it comes back down below that IPO price at some point in the next year. Now, does that mean SpaceX will? Not necessarily, but you have to respect the data. Stat number 2, 20% of IPOs go up 100% or more before coming back down. So 1 in 5 IPOs doubles first, then retraces. That is the hype cycle. That is how new stocks work when there's massive retail enthusiasm, limited float, and forced institutional buying. SpaceX could absolutely be one of those. It could go from $200 to $400. And then, when the lockup periods hit and the sellers come flooding in, it could come back to earth. Why do I share this? Not to scare you, but because I want you to make informed decisions, not emotional ones. SpaceX is an incredible company. Starlink, launch revenue, government contracts, the fundamentals are strong long-term. But in the short term, the stock price is a function of supply and demand. And right now, supply is artificially limited. When that supply opens up, and it will, things change. This is not a company problem. This is an IPO mechanics problem. And understanding the mechanics puts you ahead of 95% of retail investors. Now let's talk about the lockup periods, because this is where people get wrecked if they don't understand it. Most IPOs have a simple 180-day lockup. After 180 days, all insiders and early investors can sell. The market usually gets crushed when that hits. SpaceX did something smarter. They did a staggered lockup. Instead of one massive flood, shares unlock in waves. But that doesn't mean it's harmless. Let me walk you through what's coming right now. IPO float, 4.2%. That's what's trading today. Tiny, around August 11th. Earnings call after the earnings call, an estimated 20% of shares unlock, plus an additional 10% hits at 70 days out. That's roughly end of August. So between approximately August 13th and August 31st, 37% of total SpaceX shares unlock, 37% in 2 weeks. Think about what that means. All the early investors, venture capital funds, early employees, people who got in at pennies on the dollar, they can now sell, and a lot of them will. Not all. Some will hold forever, but enough to create serious selling pressure. Then it continues. 90 days out September. Another large unlock. 105 days out October. More shares free by November. Approximately 93% of all shares will be unlocked. And then finally, 366 days from IPO. Elon Musk himself can sell whatever he wants to sell. Now I'm not saying he sells. He's in it for the mission. But the market will price in that possibility. And institutional investors will hedge around it. This is the pattern. Hype takes price up. Lockup expirations bring it back down. Sometimes 2 to 3%, sometimes 15%. Depends on where the stock is and how much selling hits at once. If you are a long-term investor, this is actually good news, because it means you might get a better entry price in Q4 than you can get today. If you are a swing trader, these lockup expiration dates are calendared events. You can plan around them. All right, let me be completely transparent with you about what I am personally doing. Short term, I am swing trading SpaceX, playing the volatility, watching 192 and 225. If it breaks 225, I'm looking for a run. If it breaks 192, I'm expecting a retrace. I'll be sharing all my live trades in the Discord in real time. Long term, I am not buying my position until December. Here is my reasoning. By December, most of the major lockup unlocks will have happened. The 37% August wave will have hit. The September and October unlocks will have happened. The market will have had time to absorb the selling pressure. If the stock holds up through all of that, that tells you something powerful about real demand. That tells you institutions and retail still want it even with all that supply hitting the market. If the stock comes back down to 170s, 160s, even lower, that is a gift for long-term investors, because the fundamentals of SpaceX, Starlink revenue, launch dominance, government contracts, those are not going away. My plan is to buy in December and keep buying, maybe even daily, dollar cost average in, and then hold it, not trade it, not try to time tops and bottoms, just hold it. Because when I look at SpaceX 10 years from now, this is going to be one of those stocks where people say, I wish I bought more at $200, but I'm disciplined enough to not let FOMO push me into a position before the mechanics favor me. Patience is the edge most retail investors don't have. So let's recap real quick before I let you go. June 26th, Russell inclusion. Expect a run-up into this date. Possible weakness right after. Play the volatility, not the hype. July 6th, Nasdaq 100 inclusion, $8 to $10 billion in estimated forced buying. This is the big one. More volatility, more opportunity. Watch your key levels. August onward, lockup periods hit. 37% of shares unlock by end of August. Be prepared for potential selling pressure. This is where the stock could pull back and create a real long-term entry. My levels, $225 breaks up. I'm bullish. $192 breaks down. I'm cautious. My long-term entry, December, after the storm. If you got value out of this video, smash that like button. Subscribe if you're new. I drop content like this all the time. No fluff, just real analysis. I'll see you in the next one. Now let's get out there and make some money.